So what might it take for the market to continue to rally and reach those new highs? Mike Santoli identifies three things.
With the stock market emerging from a late summer slump but stalling for weeks just short of its record highs, bulls and bears agree on the basics. Earnings are flattish, growth has slowed, and the Fed will likely cut rates again this month. With this as the backdrop, the possibility of a fourth quarter rally now hinges on three crucial debates involving credit markets, crowd psychology, and calendar patterns. The bond market was at the center of August's recession scare, with the 10-year Treasury yield plunging toward record lows, but the market for corporate debt never signaled much concern, something it often does as economic stress builds. Investors have continued to demand relatively modest extra yield from companies, even riskier ones. Such firm credit conditions tend to support equity values, giving companies flexibility to issue and refinance debt. Now, should investors trust this credit market message? Crowd sentiment has remained quite subdued despite the S&P 500 recovering to within 1% of its July record levels. Investor surveys, outflows from stock funds, and measures of equity exposure by professional traders all show persistent skepticism. This tends to be a bullish factor for future stock returns, leaving investors more open to positive news than negative surprises. So is the crowd correct this time in its pessimism? And the calendar is about to turn friendly again. Late October through December, it's one of the strongest stretches of the year throughout history. The positive seasonal forces did not arrive last year when stocks had a rare fourth quarter collapse, losing as much as 20% by late December. Still, 1 year ago, there was much talk of a likely fourth quarter rally, while this year, expectations are much more muted. So investors must now ask, what are the chances the traditional year-end upside bias fails to take hold 2 years in a row? For Nightly Business Report, I'm Mike Santoli.